After natural gas recently bottomed here at $2.77, we've seen that bullish rally unfolding here to the upside with this recent high at $3.48. We've seen no invalidation of this bullish rally since, but we've seen a divergence unfolding with natural gas moving up and cumulative volume delta moving down. And so this is just measuring the buyers and sellers aggression, and as the sellers aggression has now regained some strength with this downward rally here, we have obviously seen that not being reflected in prices so far. But in today's video, we discuss whether we're about to see a breakout here to the downside through this trend line, or whether we're about to see a continuation of this bullish trend. We're going to have a look at the most important technicals, fundamentals, macroeconomics, and also geopolitics. And so let's understand, first of all, what is currently happening in the Gulf region, because we are seeing that Qatar's liquefied natural gas exports are currently still collapsing. We are seeing that the downward trend here has certainly magnified with this recent war. We have seen that Qatar is actually really having decreased LNG export with this recent spike here to the downside. We're seeing that being a 90% drop since February and a 85% drop below the average seen over the last 10 years. And so this really are numbers that are quite significant, obviously, and we do see that Qatar is obviously a really important supply source of natural gas, because it is the world's second largest LNG supplier, responsible for around 20% of global deliveries. And even though a lot of it is headed to Asia, we are obviously also seeing supply disruptions in Europe and in America. And so that obviously seems to be a quite bullish factor to us at Chronos. We do believe that those supply disruptions are certainly ongoingly going to actually impact natural gas prices here to the upside. We have to predict for some volatility, as we've already seen it here happening. But essentially, those supply news are certainly bullish, and they seem to move the market the most in the short term, and that is exactly why we believe the short-term price action could see some bullish potential. Now, in the following, we're going to assess why this is actually not true for the long-term cycles. We at Chronos always like to take a look at the long-term cycles to understand the key drivers of natural gas and other commodities. And you do see a completely different picture here. And so if you like this approach of taking a look at those cycles to learn from them, please make sure to subscribe to our channel, like the video, and also give us a nice comment down below. It's good for the algorithm, and you really support us, and don't miss the next few videos. Thanks for your support. Now let's have a look at the weekly here at natural gas, and what you can beautifully see here are a few indicators. And let's first discuss a divergence here between natural gas and the copper to gold ratio. We tend to see that natural gas prices are rising before those last few recessions hit, and those last few sell-offs certainly. And what you can beautifully see are those divergences where natural gas prices are moving to the upside, and the copper to gold ratio is actually already starting to decline. Why is that happening? Well, gold starts to outperform this industrial metal, which is copper, in times of economic stress, because gold is this safe haven asset, and therefore we do start to see this ratio declining, as we're still seeing natural gas prices moving up. And whenever we've seen those divergences happening, we have seen massive sell-offs at natural gas. We are seeing this divergence happening once again right now. That is the first signal on the list for today's video. This is a recession, a sell-off signal for us here at Chronos. Let's have a look at the gold to oil ratio second. You can also see that this ratio tends to move to the upside, because the gold prices are obviously outperforming the oil prices in times of economic stress. Now, you may ask, why are we currently not seeing this ratio going up? Well, we are in the late stage of this cycle. And in fact, if you have a look at what happened here with the great financial crisis in 2008, you can beautifully see that we've seen that oil prices actually outperformed the gold prices just previous to the crash. And then ultimately, we've seen that reversal here to the upside. And exactly that is what we believe. We exactly believe in that scenario. And as you can beautifully see, we have seen natural gas prices moving up significantly before the crash hit. And that is exactly what we believe is likely to happen right now as well. We expect to see there being upside potential in the short term, but long term, we do believe there is a structural sell-off necessary. And that is also what the stochastic RSI is beautifully showing you. We do see those cycles end and start. We do see those beautiful wave patterns here with the stochastic RSI. And you can beautifully see that whenever this bottoms, we do tend to see bottoms obviously also occurring at natural gas. And now with this recent sell-off that we've witnessed, we've actually went below this recent high here at natural gas that has been printed in September 2025. And now we believe that we're just seeing here or witnessing the beginning of a deeper structural move down. Now, in the short term, don't please misunderstand us. In the short term, we believe there's certain upside potential. But in the long run, we like to emphasize our bearish views by just having a look at the following chart. This is a quite complex chart, but actually it's quite easy to understand. We do have the S&P 500 divided by the unemployment rate squared, multiplied by inflation rate year over year, interest rates, and that is divided by the M2 money supply. And this has historically always signaled the last few bottoms that are beautifully signaled by those orange lines here. And also recessions have been marked, and we do see that whenever this ratio started to decline, that has always coincided to a bottom at natural gas. And we believe this is still yet to form out. And we believe in the short term there certainly is upside potential due to the fact that we are seeing those supply disruptions in the Middle East. However, concerning the long run, we believe that this rally could actually end quite soon. We do not obviously are able to predict where this is about to happen. We could see obviously those resistances here, all of them being the ultimate reversal point. We could even see a higher rally to this upwards trend line here. But ultimately, we are certainly bearish concerning natural gas, and that is our main thesis here at Chronos. So if you like this approach of taking a look at the cycles, don't hesitate to ask questions, don't hesitate to hit the like button and subscribe so you support us and don't miss the next few videos. You can also check out our Discord server to join our community even further. Thanks for your support, thanks for your effort in this community. See you the next time. Bye bye.